Hi guys. What we are discussing today happens to be more of a disclosure related standard than an accounting standard. This standard, maybe from an examination standpoint, would be of limited importance. But when you start working in the field of financial reporting, when you start working as an auditor, the next accounting standard, that is IAS 24, related party disclosures that we are going to discuss today, is going to play a very important role. Now, the first thing is it is important for you to understand why are related party transactions viewed with so much interest by the regulators, by the auditors, by even the general public, even the stakeholders of financial statements. Why would they view related party transactions with such an added level of interest? It is quite critical to understand that. Imagine there is one person, Satyamed, and then there is another person, Anupam. Okay. Now, Satyamed has a very high profit in his financial statements and Anupam has losses. Now, Anupam does not want to show losses and thereby lose investor confidence. Satyamed does not want to show excess profits in his financial statements. Why? Because Satyamed doesn't want to pay so much tax and he wants to keep the tax incidence to a minimum. Now, if this is the current situation. Satyamed has a high profit, Anupam has a loss. There is no way these two parties will be able to achieve the goal that they have set out for. So, what instead they do is now, what if Anupam, who has made a loss, were to raise an invoice on Satyamed, asking Satyamed to pay him an amount of 40 crores? And why would Satyamed be willing to pay, or why would Satyamed pay 40 crores to Anupam? For example, Anupam creates a fake document, or forget fake document. Anupam just says that he is providing management consultancy services to Satyamed. That is his regular business. When he provides the same service to someone else, to an unrelated person, he charges 10 crores for that service. When he is billing me, when he is billing Satyamed, assuming that we are related to each other, maybe we are brothers, what happens is when he gives me a bill of 40 crores, in his books of accounts, the revenue goes up by 40 crores. If the revenue goes up by 40 crores, naturally, the loss that he had reported in his financial statements will get reduced or will get converted into a profit. Think from Satyamed's point of view. For Satyamed, this management consulting service that he has availed from Anupam is an expense. So he records an expense in his books of accounts with the entry expense account debit to expense payable. Satyamed had excessive profits. With this accounting entry, an expense of 40 crores has been debited to P&L. So Satyamed's profit goes down and he is able to achieve his target of reducing the tax incidence. Anupam did not want to show loss to the world around and lose investor confidence. With this entry, his turnover has gone up and his profit also has gone up. So, this transaction was used by these two parties, Satyamed and Anupam, both to achieve their ultimate objective, whatever they had set out for. But don't you think this could be a drain on the taxation system of the economy? The government was supposed to collect taxes from Satyamed. Now, because of this entry, the profit has been transferred to another entity. So these such transactions, such plans could be used to basically divert profits and revenue from one entity to another. Now, the point that all of you should think about is why would Satyamed and Anupam agree to enter into this kind of a transaction? Why would Anupam agree to enter into a transaction which normally he charges 10 crores for, but now he is charging 40 crores for that transaction? And Satyamed, who is a sensible individual, he knows that these services can be availed from the market for 10 crores. Why would he be willing to pay four times the price? The only time two parties would agree to do it on terms which are not exactly commercial is when the two parties are connected with each other. The two parties are related with each other. And that is why, whenever there is a transaction between related parties, the basic presumption in that case is that the transaction is not at arm's length. The value that you are recording in the books of accounts is not the fair market value of those goods and services. And what happens because of that? Now, both the financial statements, Satyam's financial statements and Anupam's financial statements, do not reflect a true and fair view, do not reflect the economic reality of the transactions that have taken place. Therefore, all the transactions with related parties are always viewed with a certain amount of, might I say, suspicion. These transactions are always presumed to have taken place at terms which are not fair value terms, which are not arm's length terms, and hence, in order to ensure that the users of financial statements are aware in terms of what is happening in the company, the expectation is that whenever there is a transaction with a related party, that transaction has to be disclosed properly in the financial statements. Think of one more situation. It is a company which has, say, around 1000 shareholders. They have contributed their money and the company is using those funds to run the business. There are four directors. How easy is it for directors to divert all the money out of the company in the form of, salary? So easy, right? Because they are the ones who are making the decisions. It is so easy for the directors to increase their salary from 50 lakh rupees to 2.5 crore rupees and drain all the resources out of the company. So again, a director is in a position to influence the company heavily, and therefore he can withdraw funds from the company, he can siphon funds out of the company in the form of salary, and shareholders will end up losing their money that they have contributed for running the business. So, even when you are talking about a director taking salary from a company, a director is also closely connected with the company. So, don't you think the readers of financial statements and all the stakeholders have a right to know how much salary was paid to the related parties, that is, to the directors of the company? Yes, they should know this so that they are aware of the quantum of transactions that have taken place between the company and the connected parties and what impact will it have on the financial statements. Therefore, an accounting standard was created basically to focus on the need for adequate disclosures when it came to related party transactions, and that is what our next accounting standard is all about. One more thing, it is not just the accounting standard that requires you to make certain disclosures. Even the Companies Act in all the countries, Companies Act 2013 in India, Companies Act 2006 in the United Kingdom, they also have mandated a list of disclosures that have to be compulsorily made when the company interacts with a related party. With that end in mind, let us now dive deeper into the need for related party disclosures. A related party transaction is defined by IAS 24 as the transfer of resources, services, or obligations between related parties, regardless of whether a price is charged. So, even if one entity has provided services free of cost to the other entity, even those warrant a disclosure in the financial statements. And who is a related party? A related party is defined as a person or an entity which is related to the entity that is preparing its financial statements. Now, you need to know there's an entire list of, how a related party is defined. So we'll get into that. We have understood the requirement, first of all, to uh, have disclosures relating to a related party transaction. Let us now understand which all parties are covered. Okay, a person or close member of that person's family is related to a reporting entity if that person has control or joint control of the reporting entity, has significant influence over the reporting entity, is a member of the key management personnel of the reporting entity or the parent of that entity. So if I hold more than 51% shares in a company, that means I have control over the company. I am a related party. A person is related to a company, that is, a person or a close member of that person's family is related to a reporting entity if that person has control or joint control, which means, say, for example, let's take the example of Balaji Telefilms. Now, Ekta Kapoor and her family, they are promoters, majority shareholders. Assuming that she holds 52% shares in that company, then she is a related party of the company, that is Balaji Telefilms, a close family member. Now, who is a close family member? Basically, just think about it in four directions. Anyone above me, my parents, grandparents, and lineal ascendants, people who came after me, my children, my grandchildren, people who are on the same level as me. One is my spouse, and the other is my brother, sister. All of these people are close family members of that person. So if I have a 52% stake in a company, I am a related party, even a person or a close member of that person's family. So if I am a 52% shareholder and I am a related party, my close family member, say my wife, she is also a related party of the reporting entity. Second thing is, has significant influence over the reporting entity. What do you mean by significant influence? Significant influence means holding more than 20% but less than 50% shares. So if I hold more than 20% shares, say I hold 23% shares in XYZ Private Limited, then again I am a related party and is a member of the key management personnel. A person is a member of the key management personnel. I might not necessarily hold shares, but if I am a managing director, if I am an executive director, I am a CFO, then I am a key managerial person. I am also a related party. And in that case, if I am the CFO, my wife will also be a related party. That is the first clause. Second clause, an entity is related to the reporting entity if any of the following conditions apply. The entity and reporting entity are members of the same group. That is holding company, H, and there is one subsidiary and then there is another subsidiary. So holding and subsidiary are related. Holding and there are two subsidiaries, then all three are related to each other and the two subsidiaries are also related to each other. Holding related to subsidiary and co-subsidiaries are also related to each other. Then one entity is an associate or joint venture of the other entity, or an associate or joint venture of a member of a group of which the other entity is a member. A Limited holds 28% in B. A has significant influence over B. B is an associate of A. B is related to A. A and B have a joint venture, then A and B are also related, which means one entity is an associate or joint venture of the other entity. I am the investor. There is another company जिसमें I hold 30% shares. That entity is my related party. If Satyamed Limited and Sumedha Limited create a joint venture, then both of us are related parties of each other and the joint venture is also related to us. Okay. Now, holding company H, A is subsidiary, B is another subsidiary, C is an entity in which B has 40% interest. C is also related to A and H as they are all members of the same group, holding and subsidiary related. The two co-subsidiaries are also related to each other, holding subsidiary 1, subsidiary 2. This subsidiary has an associate. That associate is also related to everyone in the group. Both entities are joint ventures of the same third party or have joint ventures with the same third party. There is an entity B. Entity B has a joint venture with A. Both entities are joint ventures of the same party. There is entity A with entity A. There is an entity B which has a joint venture, and then there is an entity C which also has a joint venture with A. So B has a JV with A, C has a JV with A, B is related to A, C is related to A, B and C are also related to each other. So one entity, it has a joint venture with company 1, it has a joint venture with company 2. Company 1 and company 2 are also related to each other. Under some local laws in some countries, this might not be considered as a related party transaction. But here we are, because IAS 24 is more of a blanket, this thing, it basically contains all possible relationships. See, their endeavor is to ensure that nothing is left out. Okay. Both entities are joint ventures of the same third party. There is company B जिसके साथ company A has a joint venture. Let's call it JV1. ठीक है. B has a JV with A called joint venture 1 and C has a JV with A called joint venture 2. So both entities are joint ventures of the same third party. So JV1 and JV2 are related. Okay, this is what it means. Both entities are joint ventures of the same third party. Entity A has a joint venture with B called JV1. Entity A has a joint venture with C called JV2. So JV1 and JV2 are related. In some countries, entity B and entity C will also be considered related. In some countries, it will not be considered as related. Okay, so two JVs are related to each other. One entity is a joint venture of a third party and the other entity is an associate of the third entity. ये हो गया entity A. Entity B. Entity B has a JV with A called joint venture 1. ठीक है. Entity B has a joint venture with A called JV1. One entity is a joint venture of a third party and the other entity is an associate of the same entity. A Limited has a joint venture with B Limited called JV1. So JV1 is related to A. C is an associate of A. C is related to A. What they are saying is JV1 and entity C are also related parties. Not so C and A are related. JV1 and A are related. C and JV1 are also related. ठीक है. Now, the entity is a post-employment benefit plan for the benefit of employees of either the reporting entity or an entity related to the reporting entity. If the reporting entity is itself such a plan, the sponsoring employers are also related to the reporting entity. When we did employee benefits, we understood that there are multiple ways in which post-employment plans can be set up. These are in the form of defined contribution plan or a defined benefit plan. Now, if one entity has created a defined benefit plan for the benefit of its employees on retirement, it could be in the form of a special purpose vehicle or a trust fund or any other form, then that defined benefit plan is also related to the business entity. The entity is controlled or jointly controlled by a person identified in A. Entity is controlled or jointly controlled by a person identified in A means from this lot. Controlled by a person or jointly controlled by a person. So that entity would be related to the reporting entity. An entity is related to a reporting entity if the entity is controlled or jointly controlled by a person identified above. ठीक है. अब the person identified in A1 has significant influence over the entity or is a member of the key managerial person of the entity. Say for example, I am the chief marketing officer of the company and this company has a subsidiary company. Then I am also related to the subsidiary company is what this clause is trying to say. So basically, if you observe, what we are looking at is we are looking at a list of situations where the two parties will be considered to be connected with each other. Two parties will be considered to be related to each other. An entity or any member of the group of which it is a part provides key management personnel services to the reporting entity or to the parent of the reporting entity. So if I am the managing director of the subsidiary, then I'm related to the subsidiary, but then I'm also related to the holding company. Okay. So it is when we do group accounting, that is, when we get into consolidation, we'll understand the significance of this equation even further. And what you also need to understand is that So what you also need to understand is that entities should not be considered related parties if just because they have a director or a KMP in common, a customer or a supplier with whom the company has a significant amount of business. Sometimes, you could have, say, for example, I am a seller of clothes and most of my raw material comes from one supplier. He provides around 80% of my overall raw material. But just because there is a party which provides significant amount of raw material to me, or it is a significant supplier, does not make it my related party. I will have to consider other factors also. Or two associates of the same company are not related to each other. Now, uh, Two associates are not related to each other. Two co-subsidiaries are related, but two co-associates are not related. Okay. Two entities should not be considered related just because they have a common director. Two joint ventures just because they share two joint venturers just because they share joint control of a joint venture. This is also an important point. Okay. Two joint venturers just because they have joint control over a joint venture. So A and B, Satyamedh and Rishabh, two people, both of them they have a joint venture. Now, just because they are running a joint venture over which they have joint control, Satyamedh and Rishabh will not be deemed to be related to each other. You will have to consider other aspects of the relationship also. ठीक है. So substance over form वाला जो आपका principle है, that means you should pay attention to the actual economic reality of the transaction, not the packaging of the relationship. That is very, very important. And if I were to put it together, reporting entity, holding company is related, subsidiary company is related, associate company is related, fellow subsidiary is also related, key managerial person naturally related, holding company ka key managerial person is also related to me. But acha, one more point, two co-subsidiaries. So there is a holding company which has subsidiary A, subsidiary B. These two subsidiaries are related, but there is a holding company, it has associate A, associate B. The two associates are not related to each other. If I were to define close family member, we discussed that already, just repeating it for your reference. A person's children, people who came after me, people who came before me might is, here I'm only talking about people who came after me, that is my children and my spouse. Children of that person's spouse or domestic partner, so stepchild is also included, and dependents of that person or that person's spouse or domestic partner. So if parents are dependent on you, then you can say that they will also be covered in the definition of close family member. So these are again some of the points that you have to keep in mind, that parents will be included only if they are dependent on you. Okay. Now the term control is going to be discussed in far greater detail when we do consolidation. But for now, for your understanding, let me just put control in simple terms for you. Okay. How do you define control? An investor controls an investee when, okay, the investor has power over the investee. Then investor is exposed to or has rights to. The investor is exposed to or has rights to variable returns from his involvement with the investee, and the investor has the ability to affect those returns through his involvement with the investing, through his power over the investing. Now keep one thing in mind, that for now, just understand control as holding more than 50% shares in the investee. Now you have to see, when we do consolidation, I will introduce more and more nuances, more and more aspects of the term control. But right now, what I'm going to just tell you is, for now, when we are just looking at related party disclosures, understand control as holding more than 50% shares over the other entity, and significant influence. Again, when we do consolidation, when we understand what are associates, I will explain significant influence in greater detail. But right now, just keep one thing in mind: holding more than 20 and less than 50% shares in the investee. There are other aspects also of significant influence in terms of composition of the board, and all of those points will come into picture. But for now, let's not focus on that. Okay. Now, these are related party relationships that we saw, like a whole list of related party rules for identification. Now let us understand what are the disclosures that you need to do for these related parties in the financial statements. Okay, first of all, you have to talk about the nature of the relationship. What do I mean by nature of the relationship? What is it? Holding subsidiary है या key managerial person है, क्या है? Name, so name of the related party, then nature of the relationship, then description of the transaction. What is the transaction? Provision of management consultancy service, sale of goods in the regular course of business, whatever. Then amount of the transaction. What is the value of the transaction? If I have given a loan, say for example, one entity has given a loan to the other entity, mention the fact that what is the nature of the transaction. The nature of the transaction is that there is a loan that one party has given to another. Amount of transaction, 5 crores ka loan has been given. Balance at the end of the year, out of 5 crores, 1 crore has been repaid. So 4 crores will be shown as balance at the end of the year. Then, is there any bad debt from the party? And if you have created any allowance for receivables, then that amount will also have to be disclosed. Now, the ideal sequence of, isme se what comes first, what comes later, that is something which is governed by the Companies Act of that country. This is not something which, which the accounting standard will prescribe. Then, where there is a parent subsidiary relationship. Okay, then there are certain specific disclosures that you would do well to keep in mind. Parent subsidiary relationship. Okay. Parent subsidiary relationship, relationship between parent and subsidiary, name of the parent and name of the ultimate controlling party. Okay. Above disclosures plus name of parent plus name of ultimate controlling party. That also has to be disclosed. And in terms of key managerial person, so what above disclosures plus above disclosures plus total compensation granted has to be broken down. Total compensation granted has to be broken down into what all? First of all, short-term benefits, that is your salaries and your regular incentives, short-term benefits, salary, etc. Salary bolo, then perquisites bolo, all of that. Then pension benefits have to be disclosed. Then termination benefits. And one last thing, share-based payment schemes. These are the disclosures that have to be made for key managerial personnel, specifically with respect to the payments that have been or the total compensation that has been paid to them. This is how the disclosure of transactions will go for a related party transaction. Okay. Now, something with respect to government related entities, there is something additional that that the accounting standard wants you to know. Okay. So, government related entities. So the first thing is A reporting entity will be exempt from above disclosures in respect of transactions and balances that they have with a government. Now, if government has control, joint control slash significant influence over an entity, then the entity is exempt from making the disclosures listed above in terms of transactions and closing balances. So listed above, that means listed in the, I should say, in the previous tab, listed in the previous tab in terms of transactions and balances. Okay, now where this exemption is applied, the following disclosures should be made instead. What are these? Details of the government and a description of relationship with the entity. Details of the government and a disclosure of relationship with the entity. Then details of individually significant transactions and indication of the extent of other transactions that are significant in aggregate. Indication of the extent of other transactions which are significant in aggregate. There are quite a few relaxations that you can see that are there for government related entities. That means an entity in which the government has control, joint control or significant influence. तो ये disclosures आपको देने पड़ेंगे. Steel Authority of India, that is SAIL, for example, it is a government company. Say the government of India owns 60% stake. Then in that case, you don't have to disclose the total amount of transactions with the government, total amount and the closing balance that the government owes to you or that you owe to the government, but you have to make the three disclosures that have been stated above. So this is an additional point that you need to keep in mind in terms of related party entities. Okay, now just to give you an idea, so there is a person called Rohan. There is an entity A in which Rohan holds 100% in a company. So entity A is related to Rohan. Entity B is something, in which Rohan is a key managerial personnel. He's also related to entity B. Entity C में entity B has 100% holding. So C is a subsidiary of B. This is also a related party. Now Rohan is key managerial person of entity B and entity B is parent of entity C. So Rohan and entity C are also related to each other. ठीक है. Rohan controls A and is a member of KMP of B. See here, just because Rohan controls A and is a key managerial person of B does not make them related parties. We will have to consider other facts of the case before coming to a conclusion. So just saying that one entity is, related to the other entity, so just doing this much is not enough. Just the fact that, Rohan has 100% holding in A and he is KMP of B does not make the two entities related parties. You will have to consider other factors also. Fair enough. So if you are a student of Diploma IFRS, then this is a supporting standard. What do I mean by a supporting standard? This is not going to be tested as an independent question in the exam. It could be a small part of a bigger question. If you are students who are preparing for the strategic business reporting SBR paper of ACCA, please keep in mind that for you as well, this is a supporting standard. A question exclusively focused on this is not going to be asked in the exam. It could be, see, it is a disclosure related standard. Some information from this might get tested in some form or the other. But independently, a question only on related parties is rare. It's not going to be tested that way. But you need to be aware of the implications. If later on you pick up the AAA, that is Advanced Auditing and Assurance paper in the ACCA exam, then this standard will prove to be even more useful for you there.